10-year note yields move lower midweek, today trading down to 380, before spending most of the afternoon trading between 381 and 383, closing out just above 382, down about a basis point on the session. Today's big news was CPI, and that follows yesterday's PPI data. Today's CPI came in as expected, giving the Fed a reason to cut rates. Inflation has been in decline. Today it echoed that. We saw the numbers come in at lower than expectations, prompting the Fed to possibly cut rates next month at September FOMC. The big change, though, has been the market has been pricing in a 50 basis point cut. Remember last week we saw rates moving all over the map, moving lower as expectations were priced in that the Fed would cut rates 50 basis points at September FOMC. Well, alas, now we are seeing those odds dwindle. We are now seeing below 40% odds that the Fed cuts rates 50 basis points, still hanging on that 25 basis point cut. We have not heard directly from the Fed chair since all this has happened, but clearly the market pricing in now a 25 basis point rate cut, starting to shave those expectations back from the 50 that we saw priced fully as of last week. And again, 10-year note yields traded down to 380, closed out the session closer to 382, down about a basis point on the session. Now, what does this mean for volatility? Well, check out that CVOL index over at cmegroup.com. You will see that volatility has been drifting lower. Recall last Monday when we saw yields drop to 366. They have since rallied back north of 4% and are now hovering around 380. We saw volatility spike higher last Monday. Since then, it has been drifting lower. However, volatility still remains elevated from where we marked it at the end of July. Lastly, let's talk about what we have tomorrow. Tomorrow is Thursday, which means we get our in-the-moment look at the job market via the claims number. We also get the Empire manufacturing data as well as retail sales. Now, the big key, the market is always forward-looking. We'll be looking ahead to next week's Jackson Hole Symposium at the end of next week, where we'll get to hear directly from the Fed chair. So midweek, yields continue to drift lower, touching 380 today before closing out at 382, ahead of tomorrow's claims, Empire manufacturing, and retail sales.